Hey, what is going on, guys? My name is Nick, and today I'm going to be revealing my #1 largest stock market investment and why I've built this company to be my strongest conviction for 2021. Additionally, I'll be sharing why I believe this company is still undervalued at today's prices and when I will be going to buy more and building up my position further. So all I ask is that you consider hitting the like button on this video to help support it, because this is my most in-depth analysis on a single company, and I think you'll really enjoy it. And if you haven't already, consider subscribing for more of this investing content that I'll be putting out on a weekly basis, and I will be revealing my portfolio very soon, so stay tuned for that. But anyways, let's get right into the video. Alright, so currently the largest position in my stock portfolio is Facebook stock with ticker symbol FB. Now, as many of you may already know, Facebook has been a smaller holding of mine for quite some time now. I initially bought in at about $190 per share for 8 shares right after the Cambridge Analytica scandal, and so the stock dropped. And ever since then, the stock has actually been doing extremely well, but as of recently, I've decided to basically triple down on my investment and buy above my cost basis, which I usually don't do, and making this my strongest conviction stock for 2021. So as you can see here, I currently hold 19 shares of Facebook at an average cost of $225 per share, making this position cost around $4,300 USD. Then I also have 8 shares in my other account at a higher average cost of $264 per share, making the position cost around $2,100 USD. So in total, I hold 27 shares of Facebook worth about $8,300 USD, or in Canadian dollars for me as a Canadian, it ends up being just over $10,500. So that is a pretty sizable position for me. So just to let you know, I am already up about 20% from where I was buying at $250 to $260 per share back only a few months ago. But now let's get into what Facebook as a business is about, and then we'll talk about my strong conviction for buying the stock, illustrating both the bear case and the bull case. All right, so as many of you would know, Facebook is the largest social media platform in the world, having about 1.8 billion daily active users and 2.8 billion monthly active users as of the end of 2020. But to be able to understand the true scale and dominance of Facebook as a company, we need to look at their entire portfolio of assets. So on top of Facebook itself, the company is also the owner of Instagram, WhatsApp, and Messenger, which are all incredibly huge companies on their own. In fact, on the App Store, we actually find Facebook, WhatsApp, and Messenger as the top 3 social networking apps, which really is not a surprise. And then you might be wondering about Instagram. Well, they're in the photo and video sharing category, and in place #1 ahead of YouTube, with a 4.7 star rating, so this just speaks volumes about the incredible platform that it is. So in total, looking at the entire family of Facebook apps, we have 2.6 billion daily active users on at least one of those platforms per day, and then we have 3.3 billion monthly active users. And just to fully grasp Facebook's scale, we can divide these 2.6 billion daily active users on at least one of the Facebook platforms by the world population, which is sitting at about 7.9 billion, and this gives us 33% of the world's population. So think about that for a minute. 33% of planet Earth is using one of Facebook's products every single day. Then doing the same calculation for a monthly basis, we find that about 42% of the world's population is using Facebook's products at least once a month. Now that is ridiculous and definitely gives me as an investor the confidence about the size and scalability of this business. But anyways, now let's get into the 3 reasons why Facebook stock has been selling off in my opinion, and why I've been bullish in buying the dips. Alright, so one of the age-old concerns about investing in Facebook is that the platform is saturated and that its growth is slowing down significantly and not even growing in North America. Now when we look at the DAUs and MAUs for the Facebook platform alone, there is actually some truth to this. In fact, we can see that the US and Canada peaked at 198 million users in Q2 of 2020, while it's now dropped back down to 195 million users at the end of the year. But looking at the bigger picture, we can see that Facebook is still growing very healthily in other parts of the world, such as Europe and Asia Pacific, which actually helped them grow the platform, and only the Facebook platform, 11% year on year. Not to mention all of the other platforms that Facebook owns but doesn't disclose the numbers for individually, we can see that the overall family of apps grew its daily active users by 15% in 2020. So clearly Facebook's family of apps is still seeing a compounded annual growth rate of 10 to 15% for their entire family and the user base, so I think that's incredible for such a large company. Furthermore, we can see here that the company was also able to grow its revenue at a clip of 21% in 2020, despite despite its user base growing at a slower rate. This indicates that the average ad rate that an advertiser is willing to pay on the Facebook platform, or the average revenue per user that Facebook generates from its users, is climbing over time. So Facebook is benefiting from both a growing user base as well as increased ad rates, which in my opinion is only going to get higher as the shift to online commerce continues. Finally, we also have to remember that WhatsApp and Messenger are still largely unmonetized with billions of users on the platform. So all Facebook needs to do is basically flip a switch and turn on billions in ad revenue that is going to pour into the company. So overall, I think Facebook's proven its ability to continue growing despite all of these claims that the Facebook platform is dead. But now let's jump into another huge concern for Facebook, and that would be the recent antitrust lawsuit announced back in December of 2020. So basically, the Federal Trade Commission said that they're suing Facebook for anti-competitive actions and for creating a social networking monopoly. And as part of the lawsuit, they would plan on disbanding Facebook from its acquisitions such as Instagram and WhatsApp, which could be a huge deal for the company. Now, when it comes to lawsuits in the stock market, it's very important for you to realize that investors are very quick to price in the worst case scenario in the stock. And we actually saw some very low prices in the 250 range for Facebook stock after this was announced last December. But of course, I took this opportunity to buy more of the stock on a discount, and here's why. For one, Facebook's valuation was incredibly cheap at the time, and it was very compelling to buy in when compared to many of the other tech stocks trading at huge premiums to Facebook. And many analysts like Alan Gould from Loop Capital have come out and said that the sum of the parts valuation of Facebook's 4 main apps are worth more than the company is currently valued. So guys, even in the worst case scenario, if the FTC were to break up Facebook from its acquisitions from Instagram and WhatsApp, the combined value of all of these shares that you would get in all of the different companies would actually be worth more than what Facebook is trading at today. And to be honest, a major lawsuit like this will likely take years to play out. And in the meanwhile, Facebook is still going to be continuing to grow. So I want to take advantage of that. So for those reasons, this isn't a huge concern for me right now. And I would actually love to own shares of Instagram alone. Comment down below and let me know what you think of this whole antitrust lawsuit. All right, finally, the last and arguably most important concern for Facebook right now is that they're going to be facing ad targeting headwinds from Apple very soon. Apple recently announced that in their upcoming iOS 14 update, Apple will allow users to disable an app's ability to track their activities, which will obviously include Facebook. Now, it's likely that a lot of people would opt out of this ad tracking for privacy reasons, and this would affect Facebook's ability to target ads specifically to individuals, which could impact their bottom line. And on Facebook's last earnings conference call, the management team really didn't seem confident that they'd be able to manage this situation very well and that it would affect their revenue going forward. But more recently, Mark Zuckerberg actually just came out and said that Facebook is going to be in a very good position, and he's confident that they're going to be able to manage the situation well. On top of that, Mark Zuckerberg said, "I think it's possible that we may even be in a stronger position if Apple's changes encourage more businesses to conduct commerce on our platforms." Now, this makes sense because in order for advertisers to reach their customers, they're going to have to spend a larger amount of ad dollars to get the same results in the future. And considering that the online advertising competition is severely limited for small and medium-sized businesses, except for Google Ads, but those prices have gone extremely expensive over recent years, Facebook is in a very good position to capitalize from this. But anyways, now that we've covered the bear case, which honestly isn't even that bad in my opinion, let's get into my top 4 reasons for thinking this stock is a strong buy right now. All right, so as I alluded to in my video where I talked about why I'm buying Amazon stock, I said that Amazon is going to benefit substantially from the increased online penetration as a result of the pandemic in terms of both e-commerce and advertising. As we can see here, US online advertising spend in 2020 was about $120 billion, while in 2024 it is expected to be over $150 billion. So as long as Facebook can maintain market share, they should be seeing increased revenue growth over the next 5 years without a doubt. But what's even more exciting is that Facebook is making a huge move towards the e-commerce market by introducing Facebook and Instagram shops back in May of 2020. through a partnership with Shopify. This article says in only 10 months since introducing the feature, Facebook Shops has more than 1 million active shops and 250 million active shoppers, or at least browsers per month. Now this is huge news, guys. This honestly just emphasizes the fact that Facebook's scale is unmatched and they can easily penetrate into the e-commerce market because they already have this huge online presence in social media. Furthermore, summarizing the last part of the article, it basically says that about 30% of Americans are already using Instagram shops, and it will likely contribute to more than 1.9 billion in annual revenue in 2021. So overall, I'm super bullish on the e-commerce and advertising growth for Facebook over the coming years, and I think e-commerce is going to be a huge growth driver for them. But now let's get into the second reason why I bought this stock. And that would be for Facebook's other revenue segment, which is Oculus. Facebook recently launched their Oculus Quest 2, which is a virtual reality headset gaming device, and it's been widely appreciated by the public. And from Facebook's last earnings report, we can find that their other revenue segment grew by 156% year over year, which is honestly incredible for such a large company. Facebook is also in the development stages of creating smart glasses, which are arguably definitely going to be part of the future. And these smart glasses could be launched within the next year, but more likely within the next 3 to 5 years. And it could be a huge revenue driver for them. So clearly Facebook's taking this other revenue segment very seriously, and it's quickly approaching $1 billion per quarter. And honestly, I just see Facebook at the forefront of technology when it comes to VR and AR technology. All right, but now it's time to talk financials, because that is the primary reason why I'm investing in Facebook in the first place. So let's first take a look at Facebook's balance sheet for the year-end 2020. And what we can find is that under their current assets, the company has 17.6 billion sitting in cash, along with 44.4 billion in marketable securities. So in total, this is nearly $62 billion of cash and equivalents sitting on the balance sheet. Not only does this leave Facebook in such a strong financial position if another recession were to hit, but it also gives them the opportunity to make a large acquisition or many smaller acquisitions in the future. This could help Facebook diversify away from relying on ad revenue and then focusing more on artificial reality and virtual reality gaming in the future, which could be a huge growth driver for them. Not to mention, we can see here that the company has zero debt, and they could pay off their current liabilities with their cash 4 times over, which means that they have a current ratio of 4. So the balance sheet gets all of my checks of approval, and I definitely see this company as being very well capitalized. But now let's take a look at the future growth and what the current valuation is sitting at for Facebook. So we can see that right now, Facebook is trading at a current price to earnings ratio of about 30, and then a forward 2022 price to earnings ratio of 22. And based on the company's past earnings growth rate being north of 40% over the last 5 years, I personally think this is an incredibly cheap valuation. Even looking forward at the next 5 years, analysts see that Facebook is going to grow its earnings at about 21% per year. But honestly, I also think that Facebook is going to beat these estimates like they have been for many, many years. So now let's run a few scenarios to figure out what types of returns we might expect from Facebook if we were to buy into the stock today. All right, guys, so I created a little model here for Facebook stock. Now, the first thing we want to look at here is the 2021 EPS growth, and analysts are projecting that to be about 12% in 2021. Then over the next 5 years after 2021, the EPS growth is expected to be about 21.5% according to the analysts, but here I'm estimating it's only going to be 20% to be conservative. So in total here, we're going to have 6 years of growth. Now in the first year, we know that 2020 earnings came in at $10.09 for Facebook. And then to figure out the 2021 earnings, we know that the EPS growth is supposed to be 12%. So I'm using a little formula here that I'm not going to explain, but basically that gives us $11.30. And then over the next 5 years, we can basically use that 20% EPS growth rate, which will give us $28.12 of EPS in 2026. So just comparing the 2020 number of $10.09 to the 2026 number of $28.12, we can see that Facebook will basically triple their earnings per share over the next 6 years. Now, we also know that the current share price is sitting at about $310. And so to find the current PE ratio, we take the current share price and divide that by the 2020 EPS of $10.09, which gives us a current PE of just about 30. Now, since we know that Facebook is not going to continue growing at the same rate over the next 5 years, and in 5 years' time, it'll probably be growing a little bit slower, the 2026 PE ratio I've assumed to be 20 because this will reflect a lower earnings growth rate. So in that case, the 2026 share price for Facebook would be $562, and in total this would give us an 81% return over this period, or an annual return of 10%. Now, you might be thinking this is not the greatest annual return, but we have to see that I am being very conservative here. So if we boost up this 2026 PE ratio to 25, we can see that our annual return goes all the way up to 15% per year, and in total it'll be 127%. We also have to realize that my earnings growth rate over the next 5 years is likely conservative because Facebook usually beats estimates, so that's also a factor going for the bull case. So I would say in terms of the current share price, if you haven't bought into Facebook already and you want to, this might be a good opportunity to buy in because you will be getting about a 10 to 15% return over the next 5 years. Not financial advice, but let's say that the share price dropped back down to about $275 per share, then you could be expecting a 17% return. And then let's drop this 2026 PE ratio down to 20. So on the low case, you'd be getting about a 13% return per year. Overall, these are all pretty good numbers, and I see some big growth in Facebook over the coming years. Overall, guys, I'm extremely bullish on Facebook for the future advertising and e-commerce growth, the future of Oculus and AR and VR technologies, their fortress balance sheet, as well as their valuation showing some pretty good expected returns over the next 5 to 6 years. And I'm not too worried about the bear case either for all of the reasons that I discussed in this video. But honestly, I'd love to hear what you guys think of Facebook stock and if it's going to be outperforming the market over the next few years. Let me know in the comments below and at what price range you would be buying. So as always, if you did enjoy, make sure to smash that like button to help support this video. And if you haven't already, definitely consider subscribing for more future investing content just like this. And with that said, I will see you guys in the next one.